Silver is down 8% in September. Platinum prices, they're down 9%. Gold prices, they're also down 2%. And we've had a 500-point breakout on palladium so far this week. So in fact, as you know, over September, we have been selling short all of the precious metals. We've actually benefited now from a 200-point breakdown in silver. Platinum prices, they had their worst weekly performance since November of 2021. At the start of the week, that netted us 800 points profit on the sell side. We've been selling gold at $1,945 per ounce. Currently, that trade is up over 400 points. And of course, we've also been able to capitalize at the start of the week by snipering into palladium. And just yesterday, we banked 500 points on our long position. Now, many of you have been commenting that you've been able to crush it over September off the back of our analysis and our reports that gave you the heads up that this is a very bearish month for the precious metals. All of that has played out. The dollar index has broken back out towards 3-month highs over the course of September, and we've seen cascading sell-offs on the precious metals. They will take the staircase up, but then of course the elevator down. So if you can catch the right turn in the cycle, you can capitalize massively. So we've had back-to-back opportunities to lock in profit on the sell shorts, on the metals over the course of this week. Everything that we told you to anticipate for September to be a rug pull on the metals, this has all played out. Now in the USA, it's been confirmed this week off the back of the CPI data, we have inflation which has gone up for a second straight month. This comes off the back of oil prices that have now rallied 25% since the June low. So this is everything that we talked you through previously to anticipate. We of course were long oil from $73 per barrel. We've hit our profit target on the long side for energies, and now this week we have observed that hedge funds and money managers, they've increased to the largest position all year. We now have 89% of hedge funds and money managers that trade oil. They are now long oil. And of course, after the CPI data, we saw a spike higher in oil prices, and now we're starting to see a bit of a pullback off the back of that. Now, later this week, we also have quad witching as well. So this is the simultaneous closure of contracts for futures, and often this can provide more profit taking and volatility as we head into next week's highly anticipated FOMC statement, then also the Bank of England interest rate decision as well. So the playbook here is, of course, over September to be selling short into the metals here, benefiting on the cascading sell-off to the downside. Tick. That has all been done. So now as we get towards the end of the week and as we progress into the FOMC statement and the end of the month, I am definitely looking at opportunities here to start building out positions from lower prices, especially on the metals here. We already took the palladium trade at the start of the week. We went through that with you on the commodity report. Since that report, feel free to go back and watch it. Palladium prices, they've broken out 500 points to the upside. So we've started to lock in some profits. It's been very fast profits on that market. We're starting now to test the water on platinum as well. We're selling short for 800 points on the sell side, and I do like platinum at $900 per ounce or lower here. Silver, in fact, has just broken below $22.50 per ounce. You, of course, know that we've been selling silver short from $24.50 per ounce. That trade is currently up over 200 points on the sell side. And of course, as it relates to gold, we've been selling short from 1945, and we've got gold at the moment hovering around the 1900s. So again, once we start progressing towards the end of the week and then we're moving closer towards the FOMC and the end of the month there are going to be fantastic opportunities to buy back at lower prices that you do not want to miss out on. The playbook so far this month has been to sell short into the metals, but soon this is going to change. With that, this is where you really need to be applying data, statistics, market intelligence, understanding the cycles for each commodity, the capital flows. If you've not made money on commodities over the month of September, which has been a very straightforward playbook that we've talked you through, you absolutely should be. You just need access to more data, information, and market intelligence to really help you get more edge. Further compound that with the intermarket correlations, the ratios in the market. This will help you a lot, understanding the key areas of liquidity so you can sniper in and also bank at the right point in the cycle, reverse position, and then rinse and repeat, capitalize on the sell side and the long side as well. That is going to help you massively. This comes back to the point that Goldman Sachs have been making, that it is the golden age of trading. It's no longer the golden age of investing where you can just buy and hold and expect to make easy money. You need to be constantly trading the commodities, rinse and repeat, buy low, sell high, and repeat that process. Then finally, of course, you want to be aware of how the hedge funds, the money managers, the banks, the institutions, how they're positioned in real time. This is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.